Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel. So it's another weekend and as you all know, what we basically do on our weekends these days is to pick a synthetic indices, Derive Synthetic Index to analyze. So this weekend is not going to be any different. Today is Saturday, so I'm going to be picking a pair that for those that trade the Deriv Synthetic Indices can maybe look into through the weekend to get trading opportunities, or as the case may be, it may even run into next week. So without wasting much time, as you all can see already on my screen, I have volatility 10 index. So volatility 10 index, and I like, as we all know, to start my top-down analysis. What we do here is top-down analysis using pure price action trading strategy. And I use three major tools: the trend line, Fibonacci retracement tool, and support or resistance zone as the market would present or may present. So also for those that have been following this channel, you know I like starting my analysis from the higher time frame. So the higher time frame, by that could be the monthly or the weekly time frame. Okay, and so I'll be starting today's analysis from the monthly time frame just to get a grasp of the general direction of the market, and then we can go down to scale down to the other lower time frames. So mainly looking at what we have before us, I can say that volatility 10 index on the monthly time frame, if I to start from the very beginning, it made a low, made a lower high, made a lower low, lower high, made a lower low, lower high, lower low, lower high, lower low. It made a double top here, and see it made a double top trying to take out the previous lower high, couldn't really do so. Price stored here for a while. It made a higher low instead of coming down to make what? Instead of coming down to take out this lower low that it made before, instead it made what? A higher low. And this place resisted price for a while. We found price making a double bottom here, and then price broke through this resistance to make what? A higher high. So then we now had what? A higher low, a higher high. So it would have been expected that price would make another higher low, then a higher high, but that wasn't the case. Price came back, tried to make a higher low, but broke down to make what? Low. Now in making that low, it made lower high, lower low, and price is currently making a lower high. Now we can't say for sure if this is a lower high, because the lower high is only valid if it's able to create what? Lower low. But from what we can see, from all indications, we can see that on the monthly time frame for the last month, sellers dominated the market, and this month we are seeing an indecisive candle, but still a bearish candle. So this would give us a general information on those who are currently in charge of the market. And in talking about the direction of the market, we can see that market has made a low, a lower high, and a lower low. However, we should also take note that this low, low is in tangent with, or is at the same level with a low from the past. So some people could take this as a double bottom, but I wouldn't do that. I would just take this as what? A strong resistance, a strong support zone that has pushed price upwards to form a lower high, and then we can see that sellers are currently in the market. So that takes us down to the weekly time frame. So if you're following, you can see that all we try to do is just paint a picture. And in the process of painting a picture, we tell a story. And if the story makes sense, then we can make informed decision on what to do in the market. So now looking at the weekly time frame, from the weekly time frame, there will be no need going back all the way to start talking about what we've already seen from the daily, from the monthly time frame. So if I'm to just take this part of the market, we can see that the market made low, lower high. This lower high couldn't form a lower low. So this makes this not so important. However, it formed a higher low. The higher low couldn't push price up, just as we explained earlier, to form a higher high. Instead, it formed what? A lower high, lower low. Now we're at a point where the market is being rejected from the previous lower high. So the market came back to the initial lower high. If the market takes this level out, then we expect like retest, and then the market will likely continue upwards. However, from the nature of the candles we're seeing here, that's unlikely to happen because we can see that we have a lot of red candles. So if I'm to do this and go to my line chart to see what exactly was happening, you can see that the market has actually formed what? An M. And I've explained before on this channel the rules of engagement for trading M patterns. And like I had explained before, all you need to do is to come to the neckline of this pattern, wait for a retest, and look for sell opportunities. So if we go back to the candlesticks, we can see that that's exactly what has happened. So this will strengthen our bias that for now, we're to look for what? Sell opportunities, just as we've predicted from the monthly time frame. And to even buttress that, if I'm to add a trend, if I'm to add a trend line here, you can see that the trend line has been what? Clearly broken, but that's not what we're concentrating on. So the monthly and the weekly time frame have both aligned that we're looking for what? Sell opportunities. So now we'll go down to the daily time frame. So like I stated earlier, all we'll try to do is to tell a story, to paint a picture, and if it makes sense at our entry point, we take a trade. So now, even if we've concluded that the market is trying to what? Um, Trying to present us with sell opportunities. We can, however, see here that the market on the daily time frame is currently in a range. Now, I stated earlier that I use three major tools for my analysis: trend line, the support or resistance as the case may be, and the Fibonacci retracement tool. However, these apply mainly to trending markets. So on the daily time frame now, we can see that the market is ranging. How do I mean? If I'm to bring this out, you can see that the market has been moving between a support and a resistance. So this is our support zone, and this is what? Our resistance zone. Each candle here represents a day. So that should tell you that for several days the market was rejected by this resistance zone. It was rejected and pushed down to the support zone. So this became a valid support zone because for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days the market was rejected. Initially for 1, 2, 3, 4, 5, 6 days, it was rejected, pushed back up to the same resistance zone, and for 1, 2, 3 days, it came back down to the support zone. For another 1, 2, 3 days, it was pushed back up to the resistance zone, and now we can see that it's currently at the support zone. So also, like I had stated before on this channel, there's a rule for trading support and for trading a consolidating or ranging market. This is a consolidating or ranging market. So we say that for such markets, we sell at the resistance and we buy at the support. So for some people who are not so skilled in trading the market, they stay away the from this set of markets entirely. Remember, our bias was that has been that the market is in what, a downtrend. So, however, from what we've seen now, if we are to be looking for any opportunities, it will be in a what, a ranging market. So there are two things you can possibly do. Either you engage in the rules of trading a ranging market, or you all the same stay away from it, or you wait for the market to get to the resistance place, because the market generally now is in what, a bearish direction. So I would make do good to go further down to it will help us to go further down to the daily 4 hour time frame to see exactly what's been happening. Okay, cool. Now we can see that the range is now much bigger, if I'm to use that, or wider, because now we're in a much lower time frame. So we could see that the bearish bias we had before can still be seen here. The market came down, went up, came down, went up, ranged a while here, came down, went up, came down, went up, came down, and then went up, came down, back down quickly, went back up, and now it's down. So all we now have to do will be to concentrate. So let me take out this trend line because we are dealing with a range market. Now, all we now have to do will be to concentrate on the most recent happenings of the market. So even though we know that this is a ranging market, we can see that within this range, the market made a series of lower lows and lower highs and coming downwards. So we would expect it to also, if it were to go upwards, to make a series of higher highs and what's higher low. Now, for us to start buying this market, because we say that for a ranging market we buy at the support and sell at the resistance. For us to start buying this market, we have to be very sure that sellers have been exhausted from the activities of sellers have been completely exhausted. So how do we do that? That takes us first to our trend line. So if I'm to include a trend line here, I can see that the trend line on the H4 time frame has been clearly broken. So if I go to the line graph, then I have to also look at the last supply zone to see if it had been taken out, and that will be this area. Now, also, we can see also that a W pattern has been formed in the key zone. I also explained, there's a video on my channel where I think titled Cheat Code on How to Trade W Patterns. Now, W pattern, just to quickly say, is this is a W pattern. And we say that the simple rule is to wait for price to retrace back to the neckline, and then we look for our buy opportunities. So I can place this here as the initial resistance zone that has just been broken, and as part of and being part of what, the W pattern. So we can see that price clearly broke and closed above the zone. There's a retracement being made back into the zone. And if I'm to include my last two that I use, I can put my fib 2 here and then bring it back up. So from this swing low now to swing high. So I can go down to because now we're looking for entries. We've already established now that we're buying from the support because the market is what, ranging. So I can go down to H1 time frame. Now we can see that our chart looks more beautiful, or rather the opportunities are becoming what, clearer. Remember, for my fib 2, I say that I have what, a golden zone, and that's the zone between the 50% and 61.8 zone. So if I'm to map out the zone, like I'd always also stated, this zone most times coincides with the what support or resistance zone. In this case, we're looking for buy opportunities. We can see already that the market is retracing into the zone. We can see a lot of rejection candles here aligning with our Fibonacci retracement golden zone. So all I need to do now is to wait for price to fully come into the zone. Even if it doesn't fully come into the zone, immediately I start seeing bullish candles. Let's say, for example, we see like a bullish engulfing candle here, or we see like a morning star candle, morning star and candlestick pattern here, then I can what take my trade. So this is an almost viable opportunity already. That, in other words, it's something that we can even enter. For those that have very big account sizes, you can take this trade and your stop loss would be here, and then your take profits would be all the way up. So you've seen that we've been able to analyze this index beautifully, starting all the way from the monthly time frame. Now we're on the 1 hour time frame, where we can expect to take entries to buy this particular asset. So if you've enjoyed this storytelling to paint a picture and to make informed decision, please hit on the like button. And if you're coming across my channel for the first time, do well to subscribe if you feel that what you've seen is of value to you for subsequent videos. Also, if you're looking for someone to help you in your trading journey, we run a trading academy, like I stated in the intro of this video, and you can always reach out to us via the WhatsApp number on my bio. Thank you once again for stopping by. We'll ask that you always stop here to get videos on top-down analysis. That's what we mainly do here, of different assets, whether crypto, currency pair, Derive Synthetic, indices. Thanks a lot, and see you in subsequent videos. Cheers.